You mentioned that the capital market, has a positive effect on economic growth. But has the market actually been getting enough support to achieve this?
I would say so. If you say support will come from various sectors. There's support from the regulators and the government. Then there's also support from the operators themselves, right? If you look at it, the Minister of Finance came and made an announcement, I think earlier this year, that VAT and stamp duties were going to be removed.
No, not earlier. It was in the middle of this year.
In the middle of the year. But up to now, it's not yet actioned, right? We've not seen it happen. The pronouncement has been made, but it's not been gazetted and it's not been pushed through. Then, if you look at the transaction value, the cost of doing business in Nigeria is extraordinarily too high, right? We made a move about 2 days ago. We reduced the brokerage charges which we are charging retail clients from 1.35% to 0.25%. And a couple of our colleagues they still don't understand the reasons why we have to do that. I've received a lot of calls. Why are you reducing your charges? But I'm saying that, look, the only way to attract and bring back liquidity and velocity into the market is to do this. Because if you look at it, there's no PFA in Nigeria that pays above 0.3% anyway. There's no foreign investor that pays above 0.3%. And these guys are not frequency traders. The PFA buys from you today. It doesn't buy again until, it doesn't even sell that position until after 1 or 2 years because it can hold. Right? But once you have the retail investors that within a trade, because now with the crash in the brokerage prices, you can actually make an entry and exit within 1.6%.
So that was what actually informed your decision, because we know that Morgan Capital recently slashed brokerage fees. Was that the reason?
That is it, because it's once you have that velocity, people have this misconception that liquidity means the banks funding you. No, liquidity means you wanting to sell your shares, finding a buyer, and I want to buy shares, finding a seller, right? And the only way you can do that is to bring in as many people into the market. Liquidity in the market does not mean the bank giving you money to come and trade. No, that is the misconception which we need to do. And someone that is buying First Bank, for instance, at 15 naira, and by the time First Bank gets to 15.20, he's already made his money both entry and exit at 1.69%. It's a lot more comfortable to take that risk ab initio than someone that would have to wait for 5% gain in First Bank before he can even meet his cost. And for the market to gain 5% is not really easy with the level of capitalization which we have seen all these companies have. So the only thing we can do is to reduce the transaction cost so the velocity can increase. And once that happens, the IPO market kicks in. The IPO market cannot kick in unless the velocity has increased, liquidity has improved. People know that, okay, if I'm buying these stocks, I can easily sell it. So that is the reason why we have, and I must say, even at 0.25%, we are still in profit. So what we did was to look at our cost structure, restructure ourselves, and did it the way we have to do it. And we only hope and appeal.
Was there any right sizing in the process to do all of that?
We even recruited more. We recruited more because, I mean, the truth is, like, the technology can do most of the back offices, but you have to focus on marketing. Right? You have to rejig the operation of your staff, move them from one section to the other. But the truth is that there is no market anywhere in the world that is serious where you have brokers charging 1.35% consistently. And what I'm saying, no foreign investor pays above 0.3% anyway. So why can't we bring it down for retail investors and get the market back up?
Is the market back up? That's the next question I'm going to ask you, because you remember that there was this global crisis that happened, the global financial crisis that a lot of economies have not been able to recover from. It hit everybody across the board, and Nigeria was not spared. But that's what we're going to be talking about in just a moment. We're still looking at the Nigerian Stock Exchange 53 years after its creation. Has it been able to meet the expectation of all Nigerians? Well, that's our focus on the program today, and I'm speaking with the Managing Director and the Chief Executive Officer of Morgan Capital, Ayoleke. I beg your pardon. Ayoleke Adu. We'll be back in just a moment. Please stay with us. Welcome back. You're still watching Business Morning on Channels Television. That's the midweek edition of the program. And today we're focusing on the Nigerian Stock Exchange, how it's been like in the last 53 years. Has it met the expectation of all Nigerians, and has it fulfilled the purpose for which it was created? And I have here with me in the studio the Managing Director and Chief Executive Officer of Morgan Capital, Ayoleke Adu. Thank you so much, Ayo, for sticking around.
Thank you very much.
Just before we went on that quick break, I asked you if the market, that's the Nigerian equities market now, has recovered from that crash, that 2008-2009 global financial crisis that seemed to have hit all the markets and reverberated all the way down here to Nigeria. As of 2008, the Nigerian All-Share Index was over 60,000 points. Right now, as of Monday,
it's on 36.
It's less than 37,000 psychological line.
Yeah.
Has the market recovered from that shock?
There are two ways to look at it. If you are looking at it vis-a-vis of where the index was as of 2008, you say no, because it's quite very clear. You move down from 66 thereabouts, and you are now 36, 37. So you say that it hasn't happened. But what I would say is it's on the process. We are making some very good progress. And a lot of reforms have taken place. SEC has made very tremendous efforts. The AMCON and the CBN have done theirs, and the Federal Ministry of Finance. The stock exchange itself has done a lot of tremendous reforms. You can see that the trading system has also been changed. A new board has been introduced, the DSM board, to encourage SMEs to come and list. So a lot of these things are happening. My own position is this. If you're on your own, you stop digging, right? And you can't be doing the same thing you were doing as at 2008.
So nothing has really changed?
Things have to change within the operators, things have to change within the regulators, and things have to change within the economy. The economy at large, you have to encourage as many companies that want to list to come and list. For instance, the stock exchange will launch the ASM board. And I've been advocating seriously that any company that is listed on that ASM board should have tax incentives. I can justify that, right? I've written a letter to the SEC and to the NSC, and I'm going to be writing another one soon to the CME. And if you look at it this way, when the government says that it comes to the bond market to borrow money at 15%, I'll just look at them and laugh. That is wrong. That is wrong information. You should look at the post-tax yield. So because anybody that's buying federal government bond, right, or buying any of the state government bonds, is not paying taxes, right? So if you look at the tax effective yield,
that's paying tax to who now?
To the government, because if you bought federal government bonds, you're not paying withholding tax. If you took that money into your corporate entity, you're not paying corporate tax on it. Okay. So if you calculate it, depending on the tax bracket in which you fall into as an investor, which could range between 10 and 30%. So if you look at the post-tax yield on the federal government bonds, even the state government bond, on any bond in Nigeria, it's going to be ranging at almost 21%. And that's why the banks are not lending to SMEs. Because the banks buy these bonds, it's on the face value 15%, but the post-tax yield is high, which is not bad. It's good. It's a good incentive to kickstart the bond market. But what about the smaller companies down
Exactly.
there that cannot access